Yahoo's CEO Scott Thompson resigned after an inquiry into his academic credentials by an activist investor. Spanish bond yields rose above 6.2% for the first time in more than 5 months. I'm Lindsay Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. Over the weekend, we heard two big data points, really. Europe remains a big concern. Merkel lost support, which was a surprise there. And then China came out and they cut their reserve requirement rate, which is sort of positive news.
Well, it's two big pieces of news, and they actually add fuel to the fire. You know, if you recall last week or within the last few weeks, we've seen the different stance in Europe. We've seen the fact that they've went from pro-deficit reduction, possible austerity, to, you know what, we don't want to continue down that path, which has caused confusion. So Merkel's party losing support, to me, was another negative, another ingredient to fuel this formula of uncertainty out of Europe. Then you have the rate reduction in China, which also is confirming that China is slowing. And yes, you don't want to fight their Fed or whatnot, but again, growth slowing there, confusion in Europe. Technically, the market's been broken. You know, it's been very tactical lately. We've been talking about lower prices coming up. So hopefully you've been watching, and hopefully you're not trapped within this melee which has been going on in stocks.
So how do you weigh the news out of China with Europe? There's still a lot of negative headlines out there.
I just go to the charts. You know, technically and fundamentally, I think they both lined up. When that news started to come out of Europe, that's when I fundamentally changed my stance, saying, you know what, I think we're going to have more headlines, we're going to have more negative news. Then you combine that with the chart here, and on the chart you could see two different things. First, here's the uptrend from October. We've been following this uptrend, and then all of a sudden it gave way right here in late March. Okay, that was the first time it broke, came back up, retested, couldn't get back above those highs. Then we talked about this head and shoulders pattern. Here's your left shoulder, the head, the right shoulder. Then remember we broke that 1390 when I was out there in the Bahamas? That was your sell signal. Then, you know, we tried to talk about measured moves. Patty Don from CNBC quoted me. I was on CNBC Asia talking about this head and shoulders pattern. We broke below 1360, and then last week we hovered below it. So there was no dip buyers coming in here with any type of force. So now what I'm going to look at today is the pivot of 1343, which is right there. So we're at somewhat of support, but if we get a 30 to 60 minute close below this 1343, no reason why we don't see at least the 200-day here, and the actual measured move of this overall pattern takes you down to 1300, because from 1420 to 1360, that's 60 handles. So the measured move here is 1300, and with all these macro headlines and all these fundamental broken structural problems now, I see no reason why we can't get there.
So you're watching the usual suspects, the leaders, and what do you expect out of the week? Do you think we could see another week like last week?
I do, and for today we're down about 11 handles, so I'm going to use the usual suspects and my pivots, because that's what's been working. Short-term traders have been actually making money long and short. So for me, I'm going to watch Apple. Apple's been trying to hold that 555 to 560. If you look at the chart here on Apple, you know, if it continues to hold this level, you'll probably see more action like last week. But if this starts to give way, if we start to get a 60-minute close below 558, you're going to see another move lower. And if that's the case, you're going to see an acceleration to the downside. So I will be watching Apple, trading Apple. If I see a short setup, I'll take it. But if it continues to hold this 560, 558, you know, I do think tech will try and hold in there.
Speaking of tech, let's talk about Yahoo. Over the weekend, we got news that the CEO was resigning, and Third Point, activist investor in the stock, got 3 board seats. This stock's traded pretty flat, though, for a while.
Yeah, it's been hovering, and I think Yahoo's an almost non-event. At some point, perhaps it gets taken over. I wish they would have taken over at 32 so we could stop hearing about it. I like their product. I like a lot of their actual management. But as a stock at 15.5, maybe you could own some, but I don't think it's very compelling or it's very big for the market.
And then, of course, JP Morgan is definitely going to still be in the news. We heard last week about their $2 billion trading loss. What levels are you looking at in this one?
Well, on Friday, I actually made some money long it. It opened down into that 36.50, 37 area. It held the 200-day, but typically you hold it on the first time. Second or third time, you might not. So we're going to watch that low from Friday to see what type of damage we might have here in the banks. If you look here at the chart, you will see this was Friday's move. This was, you know, a broke pro gap lower into somewhat of support here. So I would write this down. If JP Morgan cannot hold the low here of about 36.62, you could see lower prices there. And then you could have, you could look at the XLF as well, and you will see that, it's holding higher. The banks are actually doing better, so they're not all getting pressure like JP Morgan. But if you see a move below 1464, you're going to see lower prices here, and it could also help pressure the markets.
Well, you know what? We'll get into that. More tech names, more bank names in the longer version too. So stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.